Hello and welcome back to Explain the Charts, where we break down the news and the chart data to help you navigate the Forex markets. Today, November 5th, 2024, we'll be taking a deep dive into GBPUSD, the British pound sterling against the US dollar, or as it's commonly known, cable. A quick look at recent GBPUSD news reveals a strong trend in the British pound. The recent election results, which saw the Conservative Party retain power, have injected a dose of optimism into the UK economy. Investors are confident in the Conservative Party's commitment to fiscal stability and economic growth. The Bank of England's recent monetary policy statement also contributed to the pound's bullish sentiment. The BOE signaled a less aggressive stance on interest rate hikes, which was interpreted by traders as a sign of confidence in the UK's economic outlook. This positive news backdrop has created a bullish environment for the pound, pushing GBPUSD higher in recent weeks. However, we must remember that the US dollar remains a powerful force in the Forex markets, and it's important to consider its role in shaping the GBPUSD trajectory. Now let's turn our attention to the chart data, starting with the daily chart. Zooming out on the GBPUSD daily chart, we see a clear uptrend since late October. The pair broke through significant resistance at 1.29, indicating a strong shift in market sentiment. However, this climb has also created a potential overbought scenario, which could lead to a pullback or consolidation. The daily chart shows GBPUSD trading above its 50-day simple moving average, SMA, a sign of bullish momentum. The 200-day SMA is also acting as strong support at around 1.27. If GBPUSD breaks below this level, it could signal a weakening of the uptrend. On the other hand, if GBPUSD holds above the 200-day SMA and continues to climb, it could indicate that the bullish momentum remains strong. The key price level to watch for the daily chart is 1.32. This is a psychological resistance level, and a break above it could trigger a significant rally towards 1.35. However, a failure to break above 1.32 could result in a pullback towards 1.30. Let's now switch to the 1-hour chart to delve deeper into the current market activity. On the 1-hour chart, we can see the recent price action has been characterized by a series of higher highs and higher lows. This is a clear indication of bullish momentum and suggests the uptrend is likely to continue. However, there are signs of potential consolidation or a pullback in the near term. The 1-hour chart shows that GBPUSD has been trading above its 20-period SMA, reinforcing the bullish trend. The 50-period SMA is acting as a strong support level at around 1.30, and a break below this level could signal a short-term reversal. The current price action is creating a potential bull flag pattern, which could signal a continuation of the uptrend. However, it's crucial to monitor the volume to confirm this pattern's validity. If the volume picks up on a breakout above the flag's resistance level, it would strengthen the case for a bullish continuation. On the other hand, if the volume remains low, it could suggest that the breakout is a false signal. A break below the flag's support level would negate the bullish pattern and suggest a short-term pullback. The key price level to watch on the 1-hour chart is 1.31. This is the next resistance level, and a break above it could signal a short-term rally towards 1.32. A failure to break above 1.31 could result in a consolidation or a pullback towards 1.30. Let's dive into the 15-minute chart to see the most recent market activity. The 15-minute chart reveals a more volatile price action, showing that the pair is trading within a narrow range. This suggests that traders are cautiously optimistic about the pound's strength, but are hesitant to make significant moves until there is more clarity. The 15-minute chart shows that GBPUSD has been trading above its 10-period SMA, a sign of short-term bullish momentum. However, the 50-period SMA is acting as a strong resistance level at around 1.30, and a break above this level could signal a short-term breakout. The current price action is creating a potential symmetrical triangle pattern, which could signal a breakout in either direction. The key price level to watch on the 15-minute chart is 1.31. This is the next resistance level, and a break above it could signal a short-term rally towards 1.32. A break below the triangle's support level could signal a short-term pullback towards 1.30. The direction of the breakout will depend on the volume and the broader market sentiment. Overall, GBPUSD is currently in a bullish trend, but the recent price action suggests that there may be a short-term pullback or consolidation in the near term. The positive news backdrop surrounding the UK economy is supporting the pound's strength. However, we must also consider the impact of the US dollar's monetary policy and its overall strength in the forex markets. The key price levels to watch are 1.32 on the daily chart, 1.31 on the 1-hour chart, and 1.31 on the 15-minute chart. A break above these levels could signal a continuation of the uptrend, while a break below could signal a pullback or consolidation. The volume and the broader market sentiment will be crucial factors to watch in determining the direction of the breakout.